This is a trade we're in, Aapl. We're in a broken wing called Butterfly with 45 days until expiration. This is a 15th of October expiration cycle. We're long the 150, we're short 160, and we're long the 165 call. We've been in the trade for 21 days. The underlying has moved about 0.7 standard deviations to the upside, and overall Aapl is in a bullish formation. I believe the stock is still consolidating here. We had a move to the upside yesterday. It looks like we were breaking out. Today we're just taking a bit of a pause. Overall, at least today, flow is very bullish in Aapl. There's a lot of activity in September. There's a lot of good flow in November, 155, 150s. Looks like there's some sweeping in at the money and slightly out of the money calls. But as far as this trade goes, I'm going to make an adjustment. What I'm looking to do is I'm looking to pull as much risk out of this trade as possible. Not because I'm bearish or because I think that the setup is no longer there. That is not the case. What I am looking to do is take risk off, or at least reduce as much risk as possible, because I can always add risk back on. And I think that I'm going to add risk once we have a confirmed move out of this consolidation box that's been going on since about middle of July. My idea here is very simple. I'm looking to move the long 150 call up 5 points. So I'm going to sell to close the 150 call. I'm going to buy to open the 155. This is currently going for about $2.40 credit. And what this is going to do, it is going to remove all of the risk on the downside. Yet I will have no risk on the upside as well. Obviously, this is going to cut my net delta exposure from plus 19 to only plus about 4, which means that if the stock moves higher, for every 1 point, instead of making about $20 profit, I'm only going to make about a $4 profit. And that's okay, because once we have that move above what I think resistance at around 150, 152, once we're above that level and it looks like we're continuing higher, I can always maybe add another 150, 160 call debit spread, as long as there's enough time until expiration. For the time being, I'm going to move the 150 up 5 points. This is a fairly neutral position, and best case scenario is that we see a slow drift upwards towards 160 over the next month or so. So the adjustment is going to be sell to close the 150 call, buy to open the 155. This is currently going for about 240 credit, and I will make further adjustments if necessary.